So if you look at in the short-term positioning, it's very long euros still. So we've been saying for the last couple of weeks that the euro would see some significant weakness. Obviously, we went higher first. Also, if you look at real interest rate differentials, there's been real interest rate differentials have been basically flat for the last 3 months, and the euro has continued to rally apart from the last couple of days. So all of this argues that the euro should fall and maybe fall even further from here. Longer term, though, yeah, I agree. If you look at monetary policy differentials, we've probably reached extreme levels over the bigger picture. So yes, the US will continue to hike interest rates, but if you look at Europe, they're likely to start tapering quantitative easing, within the next few months, and that should continue to support the euro over a longer term.
I mean, it really feels like the ECB just needs the Fed to get on with it and just continue its balance sheet reduction here, because central banks need to start taking some action before they miss the global cycle, before the global cycle starts to lose some momentum. I mean, already the Fed seems to be trying to hike into an economy that's just chugging along.
Yeah, I mean, if you look at growth expectations, they have been rising this year. More, to be fair, in Europe and in Asia than in the US, but they have still been rising in the US as well. So it's not choking it off, choking the recovery off. I think the greater fear we have is that inflation takes off, and that means the Fed is behind the curve. And actually, that's not a positive environment for the dollar, because...
What are the risks or the indications that inflation could, quote-unquote, take off?
Well, I mean, so far, nothing. So, I mean...
We're more disinflation
yeah,
at the moment.
we've seen inflation expectations come down, which is why everybody's talking about Goldilocks, stronger growth, lower inflation. But if you look at the, over the broader picture, we do see, obviously, unemployment rate has been falling continuously, and it's very low. The participation rate in the States has been rising, and rarely do you see inflation expectations fall for an extended period. 4 to 5 months is usually the longest time you see. So we wouldn't be surprised at all to start seeing inflation expectations picking up, and that should, I don't think that's going to scare the Fed, but it probably reassures them to start with and says, okay, fine, we don't have to worry about missing inflation target on the downside or the longer time, so then we can start tightening policy, probably more than markets currently expect.